Welcome, everybody, to today's French tax webinar for Americans in France. I'm Allison Grant Lounes. I run the relocation agency Your FranceFormation, helping people to move to France. Many of you here are our clients. And I also run the Americans in France Facebook group. So we're here today with Isaac Barchichat of Monceau CPA. Now, he has been our accountant since Your FranceFormation was set up as a company. And he's going to provide some guidance and insight on navigating French and US taxes as an American living in France. So his firm is based in France, but also has offices in the US. They have, I'm not sure how many people are on your team, but quite a large team, I think, and do US and French taxes. So they handle our corporate taxes, for example, but can also help out on the US side as well. And of course, are experts in the French US tax treaty, which is quite advantageous to Americans. So Isaac is going to introduce himself. He's going to do a presentation that's about 40 minutes long. I looked at it this morning. It is chock full of information that's going to be really helpful to you. And then we have some questions that were submitted. So you can post some questions in the Q&A box. You can also continue to submit them through the form. They'll just get added to the end of the list of questions that I have that were submitted in advance. We might not get to all of them because the presentation is quite detailed. So, we've got an hour and we'll get through what we can. But on the bright side, a lot of the questions are fairly similar, covering many of the topics that Isaac's going to cover in his presentation. And so I'm pretty sure you'll be able to get most of your questions answered. Now, if you do have a tax situation that is a little bit more complex, and you think you will definitely require professional assistance, you can obviously reach out to Isaac after the presentation to see if it would be a good fit to work with him for either your US or French taxes or both. And then we'll talk about, I'm going to host a French tax workshop for people who have really simple situations. So people who just have things like some bank interest and maybe like Social Security or something like that. We're hosting that at the end of the month. And if it's simple enough that, you should be able to file on your own or with just a little bit of assistance, you can come and do it during our workshop. All right, without further ado, Isaac, I will let you get started on your very extensive and thorough presentation, and I will keep an eye on the questions as they're coming in and organize them for when we're ready to get started on those. Take it away.
You got it now. All right. Can you confirm that you guys can see my screen, Allison?
Yes, I can see it.
Okay. All right. Welcome, everyone. Welcome to this great webinar. A lot of information, a lot of good information, a lot of technical questions as well. I'm sure a lot of your thoughts or information or questions you have now will be hopefully addressed naturally with the presentation I'm making now. But definitely at the end, which I'll try to be short. I try to answer the questions that were already sent before this presentation, but I'll try also to give the audience the stage to ask all the questions. So first of all, the menu of the day, just you look at what we're going to be talking. As I said, a lot of information. Obviously, tax deadlines, whether in the US and French system, and understanding more the French and US systems and how they work together. The majority of the points are really located on chapter 1 and chapter 2. But then, as I have extensive experience with Americans, international community, the other chapters, such as understanding the pensions, understanding the double taxations, and employment and so on, will be dealt with as well in this presentation. So with no further ado, I want to introduce myself. I am licensed in France, in the US, and Canada. I've had many years of experience in large accounting firms as well as private firms. Graduated in the US and then in France, even though I was born and raised in Paris. And I'm a citizen of France, US, and Canada. So I kind of share all the beauty of dealing with taxes that we all have to deal with. By the way, I'm also a sworn-in translator in English, US Notary Public. Sometimes it's good to notarize documents. And more importantly, also do some politics in France because I'm an official elected deputy mayor of a town next to Paris. So without further ado, I'll just move on to the main 2 chapters. As I said, we're going to be spending more time on those ones than later on. So understanding, first of all, as you know, as a US citizen And I think everybody knows you'll have for the rest of your life, even though you won't go back to the US, you will have to file a tax returns year after year. And we know those get more and more tricky. And we have to know about those things. And again, the deadlines and the forms and how all of those work with French taxes. So no need to remind you what you already know about the different main forms, the 1040 that you know here, the 8938, which is the FATCA, where you have to disclose some of your bank accounts that you have and so on, and the famous, Evolve F bar, where you have at least $10,000 during the year, where you have to file those. Most of Americans are aware of that, and we'll talk later for other additional forms. But one thing I want to highlight in the 1040, which is the first box, as an American living overseas, very few are aware that the deadline is not April 15, but June 15. You have to be, qualified, what we call the bona fide presence test, which is being outside of the US more than 330 days. Pretty much, if you spend a month in the US, you're fine. If you spend more than the US, then you will not be able to enjoy the automatic 2-month extension. So it's important to keep that in mind, that you don't necessarily have to act and react as an American living in the US when you live abroad. I felt it was necessary here to give you a taste of all the forms that you may not know about. Some of them you may already, but some don't know probably. So I wanted to share with you here the different forms as a US person living abroad, what you're looking at in terms of tax declaration. There are two forms I really want to highlight. The first one is the 8621, which is also known as the PFIC, one of the craziest form that people are always scared, and accountants as well, scared to deal with. It's all about, investing your money abroad into mutual funds or into stock market, into things that you're not supposed to as an American. It's not that you're not allowed to. It will trigger the necessity to file a form called 8621 that is per se complicated to file, and that could lead to potential additional taxes that you're already paying in your country where you reside. So that's also why you hear all the time, as an American, I'm not supposed to invest into such products, because it will create more compliance issue. One of the forms that we'll talk more about guilty tax later, but one of the forms that if you own a company in France, an SAS, an SARL, you have to file Form 5471, which is basically a mirror effect duplication of your French financial statements in dollars onto your US tax return for reporting purposes. So all of the good stuff here are things that you probably have heard of, but what you haven't heard of is, again, those deadlines that we talk about. So I often hear, how am I supposed to file my US tax and I'm at the same time do my French taxes, or what comes first? Do I have to file my US taxes or my French taxes? Obviously, as I'm talking, I'll let you look at the slides with a lot of content that I'm providing here. But on the left side, you have the US deadlines. We talked about the April 15 and the June 15 that now people are now aware of, depending if you're eligible or not. And then in France, we have the May and June deadlines that usually goes around 3 periods. It depends on the zone, on the area you live in. It's all about the department number where you reside, and it's spread out over 2 weeks, which is late May, June 1st, and June 7th. Usually those are the dates that we're talking about. So depending on your, again, area code, zip code, will tell you which zone you belong to, either late May or early June. There is no extension in France, right? We have this luxury in the US to have an extension. In France, you do not have that capacity. So you have to really make sure you have all information by June. And that's also why sometimes having a June 15 deadline for the US matter, it's really interesting, because it usually matches with the French deadline. If you fail to file your French tax returns with all of your worldwide income, yeah, I forgot to mention that as a French tax resident, you must disclose not only your French tax money, but also all of your worldwide income, right? So whatever you earn in the US is duplicated into France, okay? So if you fail to do that, then you have no other choice to wait until the seasons of the amendment season that starts usually in August or September, to amend your French tax return and resubmit a tax return, as opposed to the US where you don't file to return, you just request an extension and file ultimately in October 15 if you're ready. A very important concept that people always get confused, and this is a great introduction to the next slide. Do not get yourself confused between declaring and paying taxes. Majority of the case, when you have to declare what you earn, but you don't necessarily have to pay taxes because you're below thresholds or because you have already paid in the US, right? And that's basically what we're going to look at in the tax treaty. We're going to look at the tax treaty in a few minutes, but before we look in the tax treaty now, we're going to put ourselves in the shoes of a French taxpayer and understanding how does that work, being a French tax resident, and what does that mean? The first thing people get confused is what makes myself a French tax resident, right? So remember in 2020, we had the Brexit, right? The UK decided to separate themselves from Europe. And we've had many UK taxpayers that voluntarily crossed the border on December 31st or December 25th to spend Christmas and year-end here and make France their main place of abode. If that is your case, as those Brexiters, you'll be becoming automatically a French tax resident the day of you step foot in France. So I often hear, well, I didn't spend 183 days in France, so I'm good. No, it's not about the presence, physical presence day. It's, as you can see here, alternative criteria, which is either or of those criteria you meet, then you're becoming a French tax resident, and it could even well be the last day of the fiscal year. Now, very important, as soon as you become a French fiscal resident, there's a lot of consequences. One of them is you will have to lodge a French tax return that will start covering the period the day you entered France through December 31st. So you may have during the year 2 tax returns to lodge, one in the US as a resident from January 1st to December 1st, and from December 1st in France through December 31st as a French tax resident. And there's a lot of consequences on inheritance and many other things as well, because time is ticking. So you really have to make sure when you apply for a visa, especially if it's a long-term visa or permanent visa, that you're really becoming a French tax resident when you step foot in France, and indeed when you meet one of those criteria. You have to understand that there's a lot of talks about the wealth tax, because people are afraid that they have to pay what we call the IFI in France, impôt sur la fortune immobilière. And I said earlier that the residency date as a reference is important to understand, because you are exonerated, exempted from IFI, from wealth tax, for the first 6 years of your life in France. Same applies for inheritance. So it's important to understand that 6 years might be long, but if you have assets, which are more importantly, wealth tax is a tax related to immobilier, which is real estate holdings, real estate assets, that it's important to understand that you may have to reorganize your wealth in order to not face wealth tax, which is basically here, as I said, starting to kick in for you worldwide assets after 6 years. Obviously, if you buy a house in France and it's more than 1.3 million, you will automatically be subject to the IFI. Now, understanding the actual deadlines, right? We talked earlier about general deadlines, but it's important to understand how does that work. April 11th was actually last Thursday, the official date started of the tax season. That means for those that are using online the tax system, the tax software, they could lodge a tax return in France for that matter. For those that are using a professional, such as our clients, we've already started before, but we will intensify our work all along through the deadlines. As I said, they are either in mid-May or early June, right? So it's important to understand that no matter what, the clock is ticking, and you really need to make sure that you are gathering all of the relevant financial data, communicate that to your accountant, or do it yourself online, including your worldwide income and including your non-French bank accounts. And we'll talk about that later. But then you can see we can always modify in the month of June your tax return. which is if you lodge a tax return and you notice you made a mistake, you can go back within the month of June and correct it. Then in July, sometime through August, nothing happens. Well, per se, nothing happens in France because this year the Olympics will be here and August everybody will be out. But usually nothing happens because they process your tax return. And then usually in August or September, they start sending you the tax bill. In France, we work twofold, which is you lodge a tax return and then you get your tax bill later on. In the US, you just file a tax return and this is it, right? Remember, you can always amend your tax return after September, all along December, and that's pretty much it. You won't be able to file any further amendments or anything like that beyond that date. I'm listing here the main forms just for you to know, because the same way we looked at earlier about the main IRS forms, here we have the main DGFIP. DGFIP stands for Direction Générale des Finances Publiques, which is basically the Internal Revenue Service of France. And you can see here the main forms that you have to file should you be applicable to those things. One very important form all the way in the bottom that everybody is talking about a lot, and it is true, it's very complicated not to file this form. It's Form 3916. 3916 is basically declaring all of your non-French financial position. What do I mean by that? I mean by that, you're obviously checking, savings, IRA, Roth IRA, 401k, 529, PayPal accounts, Revolut, credit card accounts with more than $10,000 spending a year. All of those accounts must be disclosed, similar to the FBAR. They don't need to know how much you have in there, but you just have to disclose those. Failure to disclose those will lead potentially to a 1,500 euros penalty per account. So I've had many clients, unfortunately, international accounts that fail to declare penny accounts that they had, or sometimes life policy or whole life policy, term policies that they had. And unfortunately, they got fined for those accounts. So it's very important that you list them all and file them, because you have there's no problem filing, because there's no disclosure beyond the account number and the account purpose. They don't know how much in there. But if you fail to declare, then you might face this penalty. French pension, I'm really going to go over very quickly, so at least you understand the system. And for those that are still active, or those that are already retired, they have been a lot of talks recently in France, as you know, because the pension system is not working very well, so they've increased the age of retirement. And then you can see we have the similar in the US, the Social Security, which is the French state pension, which is the minimum. They call it also the Social Security here, right? And that's the state pension for which you get at least the minimum dictated or determined by the tax codes. And you have the supplementary pension, depending on which job you've had and you've held during your career, right? So it's important that you understand both. Usually as a newcomer, it is believed that you have to at least contribute for 10 years in order to start getting a benefit, a future benefit of that pension. So if you're coming at the age of 40, yeah, you're going to have to at least work at least the age of 50 in France to get something, right? So you can see here the differences and the definition, but I'm not going to go that deep in here because that's not the purpose of this call. We have also great personal incentives and great personal pension plans that you could set yourself up, which is PER or PERCO, that are similar, I would say similar to the 401k or to the IRA, right? PER is an IRA similar product that you can put it voluntarily into a specific product, and then from there deduct from your taxes the contributions. The rules are a bit trickier, but they're very similar. So I invite you, for those that want to increase their future benefits for pension, to look at those two plans. The next item here is, we talked earlier about the double taxation agreement and understanding it, because as I said, this is critical to understand where you stand in terms of double taxation. Declaring doesn't mean paying. And the fact that you're a US citizen doesn't mean that you're automatically going to pay twice. So let's talk about how does that work? Well, first, France has signed about 125 tax treaties with many countries, such as the USA, and that covers the personal income tax, the corporate income tax, social contributions, and capital gains, right? It does not cover the wealth tax, and we talked about earlier the first 5 years you being exonerated, and it does not cover the inheritance tax rules that are also very complex, okay? So I've listed here the main ones, so at least you know about what we're talking about, because it's always reference to an article number. That article number is given by norm because all the tax treaties follow the same pattern, right? They all follow the OECD pattern. And when we talk about Article 18 for pensions, whether France signed an agreement with the US, Canada, the UK, or other countries, it will always be in the Article 18. Right? So you can see while I'm talking about the Article 18, that all of your pensions from the US, whether it's Social Security, IRA, Roth IRA, 401k, or anything like that, will always be taxed in the US and never taxed in France. Okay. And that's why it's important to know those articles, because sometimes the French tax authorities, they don't master, they don't know well the tax treaties, and you knowing them, or at least being able in the tax returns to mention those articles number, will allow you and will help you better, ensuring that the tax authorities will not double tax the income you're declaring. Okay. There's one thing I want to really talk about that comes often with Americans, or Americans that have lived abroad for so long, is the streamlined procedure, right? The streamlined procedure is for those that have been delinquent with filing their taxes in the US for many years. You know that you can basically prepare a streamlined procedure and hopefully get your story, your tax history back on track, right? We know about the potential of you going back to the US and having to fail, customs, or having to deal with a local enforcement if you have failed to file your taxes for so many years, especially if you've had the tax liability. Well, I invite everyone that has not been able to comply with their US tax requirements to think about seriously about the streamlined procedure, which is making yourself back on track. With COVID, we've seen a lot of people, leaving the US voluntarily or non-voluntarily, and decide to live next to their girlfriends, boyfriends, spouse, cousins, family, or just be abroad. And as a result, working remotely has become very popular, but you really have to be cautious when you are working remotely for a US company in France. So it's not illegal. You can do so. But if you don't follow the rules, then you might get into trouble. What do I mean with the rules? What I'm explaining to you, I'm sure some of you are reading what it says there, is France works around the notion of territoriality. That means if you're sitting in a chair in France to work on Teams, on Zoom, online calls, emails, then that means your business is a French business and not a US business. Well, but you're going to tell me, but Isaac, I have my LLC in the US. My clients are located in the US. I'm paying taxes in the US. Well, France will tell you, hey, my friend, the tax treaty we signed with the US does not cover that situation. You're either there or here, but you cannot be both at the same time, right? So that means your company must be registered in France and you should be paying taxes in France. There are solutions. If you look on my webinars online, I offer a lot of solutions about how can I maintain both companies in France and the US, because in the US, I need to maintain a company there to be the face to my customers. You can do that, but you always have to have a French company as well in order to ensure that you are completely allowed to work in such manner in France. So make sure you're following if you are working remotely that's like. We talked earlier about immigration status, about the visas and so on that you are applying. I just listed here some of the visas structure. Now, why am I doing this here? Because oftentimes I see people coming to France with a long stay or long-term non-immigrating visa, right? A tourist visa for more than 12 months. and then ultimately start working while being here, right? Or being limited while being here because their stay is by default temporary. So my goal is to tell you sometimes there are true immigrating visa that are available for you that you could explore in order to really be completely considered to be a French person and hopefully perhaps enjoy a faster path to French citizenship at some point. In terms of companies, often ask questions, how does that work? Here, I'm just giving you a snapshot of the different possibility, right? So you could be an employee of a foreign company, it's called detached. You could have a branch or a sub of your US entity, right? And you can be also what we call a CNFE, which is virtual company in the US. I mean, a company in the US having a virtual presence in France for the sole purpose of having a French employee, or the typical structure that I'm sure you've heard of, the SAS, the SARL, or the micro enterprise, also known as auto-entrepreneur, okay? Before we even go to us about what we do, I wanted to give you other considerations because I know there's a lot of talks, a lot of questions that you guys come around or you hear or on the blogs or on the internet. I just want to make sure that you're aware of. So a couple of things. First, if you come for work in France and you're being called upon your employer in France from the US, you can get advantage of the great tax expatriate regime that could exonerate you up to 50% of your French income, right? So it's important to keep in mind if you're still in the active world or intending to come to France and work for a company in the US and that company transfer you to France, or a French competitor calls you up and say, come work for us, you might be eligible for that tax regime. Trust. I could do a whole webinar just on trust because although it's a very popular vehicle and tool in the US, in France, it's not well perceived. And the ultimate goal to be achieved with a trust, which is optimizing your tax positions in France, will not be recognized. That means the heavy inheritance tax rules we have in France will still apply whether you have trust or not. So it's something to definitely consider if you're coming to France permanently, whether it's still important and efficient and needed to have relevant to still have a trust in the US. We can always talk about that later, but just giving you an overview. Puma tax. Puma tax, a lot of people are talking about it and they don't necessarily understand it. In France, as you know, it's a very social country, right? So meaning you can get access to Social Security, to pensions, to a lot of things. You go to a hospital, even though you have to wait, but you get treated without being asked whether you have a private insurance or not. That has a cost. And that cost is basically the Social Security. If you work through a company or through independent or an employee, you contribute. Those are the social contribution. But if you have none of those, and basically you come to France as a retired person, then you might fall into the Puma tax area, which is basically you have to contribute and pay for it. How does that work? If you make more than 23,000 euros, 23,000 euros a year of capital gains, sold some stocks in the US or a house, and you have not had any professional activity in France, more than 16,000 euros of revenues as a professional activity, then you might face Puma tax. So it's important to keep in mind that although it's not that much, but you still can be assessing that tax. Donation. In France, you know that it's not like in the US. You have about $13 million that you can give pretty much cash for free during the duration of your life. In France, unfortunately, it's about 100,000 euros every 15 years to your kids. So if you have two kids, each parent can give 100,000 euros every 15 years for each child. So you really have to keep in mind, keep into the global thing. What am I going to do with my donation if I move to France with my children? Can I do something else before? Can I set up an SCI? Can I set up things that will optimize the donation to my children and avoid, that's going to the next item, the inheritance heavy tax. Unfortunately, in France, inheritance can be taxed up to 50%. So you spend your whole life building wealth and building patrimoine, as we say in French, and then ultimately end up with being taxed or share that not only with your heirs, but also with the government. So you really have to keep in mind about strategy for those things. The two latest updates I wanted to give you before introducing us and what we do here and going to the Q&A was the Tax Simplification for American Abroad Act. So, they're thinking of, and again, it hasn't been passed. It's just a bill that has been proposed, and you can see here the reference and get all the details about, being able to lift off, for low income or moderate income people, taxpayers, those obligations. We see more and more in France, and it is completely true. We see more and more in France, people renouncing of their U.S. citizenship because it's kind of complicated outside of the US, not only because of this heavy compliance. US is one of the only country in the world that will require you to file a US tax return, even though you don't no longer live there or don't intend to go back there, but also being given that it has imposed a lot of pressure on the financial institutions, such as the banks. And I'm sure a lot of people have already tried to open bank accounts in France. It's been complicated because the French bank has to report basically the content of your bank account through the IRS. So obviously, sometimes they don't want to deal with that. So that's one tax simplification bill. And the other one is the GILTI tax that came out during Trump, and that was initially targeting large companies that were based out of the US but having shells or other branches outside of the US, such as Luxembourg or Cayman Island or Ireland, to pay less taxes that is required that in the minimum in the US. So ultimately, by passing this bill, all of the US taxpayers having companies in the US, outside of the US, fell into that category by default. That wasn't the primary intention, but that was a unfortunate secondary effect of that law. So that means if you're an American having an SIS, which is a regular company in France, and by having a great accountant not pay the minimum taxes, which is according to the US 18.9%, you will have to pay the difference in the US, right? But thank God in France, the tax rate usually is higher than 18.9. And we know now why, because we wanted to avoid the GILTI tax, but also because it's a way to contribute to the social system in France. So you don't necessarily have to deal with the GILTI tax, but you have to be aware of that matter. Before I open the Q&A, I just wanted to introduce ourselves. What do we do? Where can we help you out? Obviously, we can help you with the great help of Allison when you intend to move to France and prepare you to the best of capacity with the great adventure of settling yourself in France. But we do basically 360, everything from income tax to corporate tax to business plans, audit, estate planning, and so on. So if you need anything, you have my email address there. You can email us. I'm sure Allison will pass along later if you have any questions regarding getting in touch with me or even sharing those slides later on, because I believe everything is recorded today. But you have here information. And as we said, we have offices in France mainly, but also in Florida, in New York, and in Canada. And we are helping clients, and mainly expats from the US moving to France, or even people from France moving to the US. With no further ado, because I think I'm right on time, 6:40, I'm going to be addressing now for the next 5 minutes the questions that were shared with us earlier, and I'm sure Allison will open the Q&A right after for those that have not been able to send us questions about it. I'm sure some of the questions maybe are already in the pipelines, but I'm going to address them today. Can I continue to have a US-based LLC and pay myself a salary from it? And if so, how will that salary be taxed? I believe I have answered that you can maintain a US corporation presence in the US, but if you work from France, you'll have to create a company in France. So the idea is either the company in France will bill directly your clients wherever they are, or the French company, which is you, will bill you other company in the US for the work you're performing on behalf of that LLC. Okay, and the LLC remain the face to the customer. Again, how you pay yourself will determine what are the consequences in terms of Social Security. But obviously, you will no longer pay yourself in the US because you live in France. You will pay yourself in France and be subject to the Social Security system in France. Moving on to the IRA 3916, there's an IRA Roth conversion get reported into the French tax. I said that to you earlier. Yes. How will the actual Roth cash out reported when the time comes to avoid dual impact on income earned in France? I believe I already answered that it is considered to be in the pension family treatment and be taxed as per Article 18 of the tax treaty in the US and not taxed in France. Do the IRA Roth IRA 401k get reported into 3916? Yes, as well as HSA accounts. Some states that being pension personnel do not belong to in 3916, but there's no clear direction. Well, now you have my clear direction. You can declare them all into your French 3916. One thing I really want to emphasize here when it comes to tax treaties, and especially with US tax, and it's very important that everybody listens to that one. When you live abroad, you have to file a US tax return showing your French address. If you show your French address, not only you might be eligible to the automatic 2-month extensions, you might be eligible to the foreign earned income exclusion tax credit that everybody knows. You might be eligible a whole list of things. But if you are trying to outsmart the system, which is keeping your US address onto your US tax return, right? For my mail, for my DMV, or for whatever reasons, then think about it twice. The tax treaty that has been signed between France and the US concerns only the federal level. The states have not been signing any tax treaties with countries. Some of the US states do not recognize tax treaties with France or anybody else. So if you put your US address while you reside in France, you will have to lodge a US federal return as well as state and local, and you might end up being double taxed because you voluntarily put your US address. If you want to take advantage of the tax treaty and be avoiding the double taxation, you really have to make sure you're putting your French address where you belong. Capital gains. How can a single US retiree sell a primary US resident without incurring French capital gains or having to sell your home before obtaining a visa? How can a single US retiree sell a primary resident without incurring French capital or having to sell? Okay, that's basically the same questions. First of all, if you have your primary, first of all, before you even arrive to France, not even applying for visa, arriving in France, you're not a French fiscal resident. So any financial event occurring before your arrival date will not concern France. That means you can do whatever you want. France will never ask you any questions about it. So if you sell your home, whether it's your primary home with the home exclusion tax credit that we all know, 250K single, 500K if you're married, or if you sell a secondary home, you will not be subject to any type of taxes in France, whether taxes or social security or social charges taxes in France. If you end up coming to France and haven't been selling your primary residence, then just know that you have 12 months upon your departure to sell your home in the US and be exonerated in France of any taxes. If you end up keeping your home in the US more than 12 months, and at some point it's no longer your primary home, it could becomes a non-primary home, then you might face taxes in France as well. Stocks. How are capital gains from US stocks, bond interest, and non-tax and both exempt? So it's very important to keep in mind this point when it comes to stocks. And that's one of the key advice I give to my client before they come to France. If you trade with Charles Schwab, Scottrade, or any of those in the US, you have a great portfolio. But that portfolio includes US stocks, which is IBM, Microsoft, Apple, and so on. Those will be taxed according to Article 24. They'll be taxed under the US tax rate, which usually is lower, between 15 to 20%. It's lower than France in the US. If through that same portfolio you have non-US stocks, for example, Total, Danone, Nestle, even if it's the same portfolio that you have in the US, those will be taxed in the country of residence, which is France. And as a matter in France, all of those capital gains are subject to what we call flat tax of 30%. Okay, very important to keep that in mind. Inheritance. What is the impact of French taxes of inheritance in the USA? None. No, I'm sorry. Inheritance is very complicated. First of all, do not get yourself confused with filing your French taxes as a tax resident and the inheritance topics, which are not necessarily connected one to the other, right? If capital inherited in the USA is used to purchase real property in France, how will French taxes impacted? So first of all, what you inherit has what you inherit and what you do with that money has nothing to do one the other. So if you inherit money in the US before you arrive, as I said earlier, nothing will happen. But if it's within your arrival in France and you are here, then there are some rules. Usually the first 6 years, whatever happens abroad in the US is not subject to any French tax. Problem usually starts after you becoming a real permanent French tax beyond the first 6 years. So really have to look at that further in due course. When it comes to the last three questions, residency. So if I move to France in August from the US, I rented an RV through 2003 and purchased home in France. It is my primary home. I don't income. Do I have right now? So remember, where you reside in France, we don't care, right? It could be by your friends, your family, Airbnb, or you purchase a home. We don't care. Article 4B of the tax code, which I cited earlier today, is what defines you as a French fiscal resident. So if you set foot in France meeting one of those criteria, which is intention of being here, my main place of abode is here, my kids are going to school here, that's it, France is my home, then that day onwards through December 31st of that year will be your first year of reference. And yes, you will have to file a tax returns in France. Auto-entrepreneur. I am on your staff and I have never worked in the US. Okay. To avoid paying the self-employment tax in the US, I have to submit for SEN, which is the totalization agreement, but I'm unable to find where to locate that form. From an understanding, it needs well, you will never find that form because that's not how you would do it. If you work in France, you have to pay taxes in France. End of the story. The totalization agreement that you're mentioning is for an American guy that works for a company in the US that is being sent on a special assignment for 6 months, for 12 months as a détaché, right? Detached person for a very short period of time and does not want to pay Social Security taxes in France. So what the France and US have agreed is during that duration of the time, he can or cannot pay taxes, social taxes in France, but we France will recognize that status, and your employer has to file with the Social Security of France an authorization as part of an A1 form ahead of the game. You cannot just decide one day I'm an auto-entrepreneur and that's it. Retirement. Can you explain for a US expat retire in France who will live in there full-time, what are the tax obligations on private pension? We talked about that. Article 18, declare but not pay. Social Security, same thing. Interest, income, and IRA withdrawals, same thing. Explain for US expat retiring in France, what specifically is the wealth tax? And is it just real estate or asset outside of the real estate? Yes, it is real estate. Real estate, it could be REITs as well, right? You have that in the US. But it starts immediately with assets located in France, as soon as you become a French tax resident, and your worldwide real estate assets are included into that wealth tax computation after 6 years of being in France. I think I have about 10 minutes, Allison, to address all of the other questions that were not listed here.
Great. Thank you so much. So a lot of the questions were duplicates or, very similar to questions that have been submitted after. So I think we've done a really good job of covering most of the things. I do want to say we're working on organizing another webinar and Q&A, probably with Isaac and with a notaire as well, to cover things like inheritance, trusts, donation, things like that, because those are all very complicated topics, as Isaac mentioned, and they really deserve their own webinar. So hopefully we'll be able to organize that after tax season has concluded. So one of the questions that came up in the Q&A box is really interesting. So somebody asked, you mentioned that there are some people who are doing these expat tax returns for Americans in France and they're not familiar with some of the rules. So what are some of the most common mistakes or problems that you see when people are using, like back in the day when I worked, when I briefly worked in taxes, we had people who would come with like tax returns prepared by H&R Block, and those people like were earning minimum wage and didn't know anything about the tax treaty, and it was a mess. So what are some of the most common mistakes or problems you would say that you see in tax declarations prepared by people who are not familiar with both systems?
So, first of all, great questions. I want to emphasize that because, again, a lot of people believe, well, I go online, I have this great expat tool for $100, you can do it all, H&R or TurboTax, or my friends, accountants or cousins back in the US. Look, you can work wherever you want, but that person has to be literate enough with French and US taxes together, because there are tax consequences, whether you like it or not, on both sides of the ocean, right? For example, I mentioned many things earlier today. The GILTI tax, right? GILTI tax is for if you have a professional activity in France and you don't know how to label it. Unfortunately, Alison and I came around this discussion recently with an American preparing taxes in France that didn't know about how to respond or treat or categorize the French income, and has assessed the GILTI tax, $12,000 for one of my clients, to pay in the US because he didn't know how to treat that. So it's important that you're not, putting yourself in the hands of someone who doesn't know. But more importantly, we talk about the tax treaty. It's important to know the tax treaty to avoid double taxation. The tax treaty between France and the US, by the way, it's one of the best, right? Where you really have to pay sometimes very limited amount back in the US if you're an American. So it's really have to know about it. The deadlines. We talked about the deadlines. If you are abroad, then you can enjoy the automatic 2-month extension June 15, right? The foreign earned income exclusion is only available for those that are really bona fide presence tests outside of the US. So you really have to look at those things. And then the categorization, right? Whether, what you earn in France has to be declared in the US and vice versa. So if a US tax preparer is not literate enough with what is a PFU, which is the flat tax, what is a PER, a PERCO, assurance vie, and all of the great stuff that even myself sometimes get myself crazy. I'm sure for a typical CPA in the US, it might get it wrong, and sometimes it might lead to additional taxes that we don't want to pay.
Yes, great. And I've seen, unfortunately, many of those things myself. Okay, there's a question about IRA reporting IRAs and HSAs on Form 3916 and what category to include them under, because it's apparently the three possible categories don't seem to apply.
So there's a lot of debate about the 3916. I kind of, went very fast earlier, but I really want to understand the philosophy behind it. With all the fiscal authorities worldwide working closely one to the other, it has become clear that they wanted to give the opportunity to the taxpayer to voluntarily disclose what he or she has worldwide or outside of France. Because as you may know, France, with many other countries, they automatically exchange your financial data with other countries to ensure that ultimately someone pays taxes. What's behind it is, if myself, I have a US bank account and I disclose it, then it is normal somehow that I will have US revenues declared into my French taxes, right? But if I declare foreign revenues without a US bank account onto my French tax return, or vice versa, if I declare a US bank account and have no foreign revenues, that could trigger questions from the tax authorities in France. So the first thing you have to understand is the philosophy behind it. Now, the French tax authorities, they don't know the specifics for each country. They're not going to give you a whole list of financial accounts to disclose depending on which country you're from. Remember, we talked about the US, but I also know in Canada, but there's a lot of countries there that have similarities or their own specificities when it comes to financial accounts. So my view, based on the readings of the text, that any financial institution that you have money in or you're using money with should be disclosed. And we talked about PayPal accounts. We talked about credit cards over $10,000 spending. all of those HSA, IRA, Roth IRA. Now, there are categories such as checking, savings, or others that in the 3916. If you have any issues, you can always come back to me and I'll show you how to get there. But again, the bottom line is you're better off declaring everything you have and avoid potential penalties for no reasons.
All right. And just for the record, too, like the prefecture, if you're renewing a visa, they're coming back more and more, not just for French bank statements over US bank statements or statements from any other country, but when you do show them your bank statements, they become aware of all of all of these accounts and all of this money that you have. Okay, there are two questions about LLCs that I'm going to group together. So one is about having a US LLC. Are you saying that the income generated by an LLC is taxable in France and the US and is not exempt from double taxation, or how do you manage that? And then the other question is about having a modest LLC in the US, less than $30,000 a year. Can I declare and pay taxes via the auto entrepreneur regime in France, or do I need to make a full corporate entity? I'm assuming in this case that the US LLC is the only client of the auto entrepreneur activity.
So a lot of good questions. I'm going to try to summarize them all into one answer. First of all, understand again the philosophy behind it. If you live in France, your company must be registered in France. Right? If you live here and work here, your company must be registered where you reside. If you tell me, look, Isaac, I'm going to commute back and forth in the US and work from the US and use my company there as a vehicle, then I'm fine with it. But that's not really the case, right? Really the case, we know that on a Sunday evening or on a Monday morning, you're going to be on a computer talking, emailing, Zooming, Teams, and so on. If that's the case, then you're definitely within scope of having a French company. Now, as I said, you have two options. Option A, which is the preferred one, forget about the US entity, dissolve it, and have a French company be the vehicle to bill wherever your clients are. At the end of the day, that's what we do here in France, right? I have a company in France, my clients could be worldwide. But if you tell me, look, Isaac, I can't because I'm working with the government, I'm working with an institution, I'm working with someone, or I'm working with an American that only want to deal with a US company, then in that case, you're going to have to deal with me twice, on the US and on the French side. But that's okay. In that case, in the US, you continue conducting business as usual, the LLC being the face to the customers. So let's say you bill $100,000 a year for services rendered to clients wherever they are in the US. Your US bank account gets $100,000. But in order to achieve that $100,000 threshold, you worked from France. So that $100,000 should be getting a bill from your French company for at least 70 or 80% of that, right? Because the majority of the case you did work from France. So essentially, instead of having everything 100% taxed in the US, you can leave a little bit portion in the US to maintain your LLC if you want running, but ultimately you're splitting the income between the US and France, with the majority being in France because that's where you reside. Ultimately, you'll pay taxes in the US for whatever's left in the US, and whatever comes in France, you'll be taxed there. There is no such a thing as a small or modest company. You are a company as soon as you're a company, right? So if you owe money, if you made money, you pay taxes wherever you have to pay taxes, and end of the story. Now, I can tell you auto-entrepreneur because auto-entrepreneur is, what does that mean? Auto-entrepreneur means I have a French company, and it's a French company, even though it's a sole proprietorship, similar, and you have across an LLC. So you could use that auto-entrepreneur as being the vehicle for you for France, to build your US company, and that's fine. Essentially, you're bringing that money from the US back to France, which, remember the analogy I used earlier today, out of the 100%, 80% should at least come to France. So at the end of the day, if they come to France, instead of being an SAS or SASU, an EURL or SARL, which are all corporate type structures in France, but you choose to work with a micro enterprise, which is also known as an auto-entrepreneur, that is fine with me. And then whenever the money comes to auto-entrepreneur, you're subject to the French taxes.
Great. That's going to be really helpful for everybody. There's one more question I saw here. Someone asked you talk a little bit about state taxes and how state taxes are handled for expats. Now, I know each state is going to have a lot of different rules, and California is a particularly sticky state that doesn't want to let people go. But if you can talk very briefly about I guess, leaving behind state taxes once you move to France. And I think that will probably be our last question for this evening.
So look, States obviously, as we pointed out, want to keep you, they want to keep you live, they want to keep you there because that's what the money is, right? Especially you stated the West Coast, California, but the East Coast, New York also is very aggressive when it comes to taxes. So obviously, remember what I said earlier, you need to ensure you're not labeling yourself as a US tax resident, you're a US person, but not the US tax resident with your state because you might face taxes there as well. But look, you no longer need to deal with your US state if you left the US. The only year you're going to have to deal with them is the year of transition. If you left the US, let's say July 1st of 2023, so you are a French tax resident starting from July 1st through December 31st, which you will lodge a tax return as a resident from that point on. And we already said anything before that, France has no say and doesn't want to know about it. When it comes to the US, you'll have a federal tax return either way because you know that you're US tax resident. For the US person, you will have to file a US return your whole life. But when it comes to state, that year, 2023, you will still file as a resident because in the US, state residency requirements are usually more than 183 days within that state. So you will have to lodge a state tax return as a resident. And then the following year, 2024, you have nothing else to do. You just lodge a federal return. End of the story. Exception to that, if you still have income in that state, you still have to file a state income. But in that case, you will no longer file as a resident of that state, but as a non-resident. And the rates are different, obviously. I hope, Allison, I was clear enough during my presentation. A lot of information, as I said, but I really, based on my experience, I really wanted to share what I have seen over the last few years coming on the table. I feel awful when I have people, and we talked earlier about the guilty tax, about people being not guided properly, let alone being in France is complicated, and if you don't master the language, but it's important that they know about taxes. It's not a nightmare. It's not that complicated, but that's what we hear as professional accountants. We love that. So come to us and go enjoy your baguette and your croissant in France, and let us deal for you for that. So thank you very much, Allison, for giving me this opportunity. I don't know if there are any questions, but I'm definitely available for everyone here to contact me if they have any questions. I'm again share my address here, info@moncaucpa.com. And you even have my phone number or my US phone number if anything like that is needed. And probably Allison will have more webinars to be done in the next few months. After busy season, I promise I'll have more time.
Yes. So I did put Isaac's email in the chat as well if you want to just copy and paste it. Yeah, I agree. I mean, Facebook groups and things like that can be really great for getting a little bit of information, but unfortunately, like there's a lot of people who come back from social media with a lot of poor quality information or information that is partially true. And also keep in mind that each tax treaty is different. So what applies to you as an American in France is not the same as what applies to someone who is British or Canadian or Australian or from New Zealand, et cetera, et cetera. And so, this comes up a lot as well, where people think the rules are similar across countries, and that's really not the case. So obviously, if you do need to file a tax declaration for 2023 and those deadlines are coming up, you can contact Isaac and his firm for assistance. If you have a relatively simple situation, meaning you have interest, you have salary, you have pensions, you have maybe some auto entrepreneur income, you have interest and dividends and foreign bank accounts, you can we're going to host a French tax workshop for simple situations, especially for first-time filers. We have a lot of our clients coming who, have arrived in France during 2023 and need to file their first paper tax declaration. So we're going to be doing that on April 30th. It's going to be on Zoom. If your situation is too complicated, you need to go to Isaac. But if you've just got a few things to declare, you're retired and you basically have Social Security and pensions, things like that, we can handle it. I also want to share with you, I've created a Notion template for tracking bank accounts to report on the FBAR, and I'm going to share my screen very briefly so you can see this. to track your international bank accounts that you can then report on your FBAR and your French Form 3916, your US accounts, and your other miscellaneous accounts. And so that is available as a download. We did have an FBAR party the other day. Sorry if you missed it, but it does cover how to report your foreign bank accounts on FBAR and on Form 3916. So that's available as well. I'm going to give you the link in the chat. We're organizing another US tax webinar probably during the month of May. So that will be posted on social media when we schedule it. And like I said, we will be doing more of an estate planning and financial planning webinar sometime after tax season is done. So look out for that as well. And we've got a couple of recordings for previous financial planning webinars that are on our website. So thank you all for coming. That was really informative and answered a lot of the questions that I see come up over and over and over. And so I hope that you got as much out of it as I think I did and our clients did. And good luck, Godspeed for the rest of tax season.
Indeed, yes.
And I think that you have everything you need from me. So
All right. And Allison, just for the viewers here, I usually offer 15 minutes free consultation. So if anyone has any question or doubts, not sure will be the best now, but I'll try to manage to address those questions whenever it's needed.
yeah, for anything that, has to do with tax planning or simulations or anything like that, April through June is not the time, but summer will be a good opportunity to answer some of those questions. All right, so Isaac's contact information is in the chat. The information about our tax workshop and everything is in the chat. This was recorded, so if you weren't able to make it live or if you had to drop out, or if you just want to listen again because it was so packed with information, we will be editing this over the next couple of days just to take out the pauses and things like that and posting it on YouTube and sending out the link. So thank you so much. Have a great rest of your evening and take care.
Take care, guys. Bye-bye.